Hello, RWorld. Welcome back to RWorldTalk. We are excited for this morning's episode. Lucky enough to be joined by our Diamond affiliate, Mr. Emmanuel St. Germain from Choice Mortgage. Welcome.
Thank you very much. Pleasure to be here, Chris.
So, Emmanuel, tell us, actually, first off, let me say a huge thank you because you just became a new major investor, and as well, Choice Mortgage has become a corporate major investor as well. So, huge thank you from everybody here at Broward, Palm Beaches, and St. Lucie Realtors. It's important stuff that we do with our advocacy efforts, and having major investors like you certainly helps us change the game.
Thank you.
So tell us, what's new in the mortgage world? Anything new, anything changing? I know that's been a hot topic lately with rates sort of going up, coming back down. What are we looking at now?
Yeah, I mean, I think in general, what you're looking at is it's really one of the biggest things that we collectively as a real estate power team really need to be thinking about is going to be more mindset than anything else. You know, there's certainly products. We've been doing a lot of the temporary buy down products. Those are phenomenal in terms of, I guess if anyone doesn't know what that is, that's where you essentially get your seller to subsidize the interest rate for the buyer. So if today's interest rate was 6.5% and we did a 2-1 buy down, you know, in year one, a buyer would pay an interest rate that's based on a payment that's based on an interest rate of 4.5%. And then 5.5% in the second year. And then the idea is simply that by the time we get to year 3 through the rest of the term, we'd already be able to refinance that individual. So, you know, collectively, the financial world believes that interest rates are going to come back down.
Okay.
They originally were predicting the end of this year, early next year. I think depending on what's happening with inflation and these CPI numbers, that may or may not get delayed. So I've been telling people 12 to 18 months.
Okay.
So the concept for us is let's get you locked into this house now. Let's find a property that you absolutely love. And if you can afford this payment at an interest rate of 6.5%, or if we're able to negotiate one of these temporary buy down products, and then now you've got a little bit of reprieve for a few years, which is great. And then what we'll do is when the rates come back down, we'll refinance you into a lower long-term rate. So okay. I think that's one of the big avenues that we're really focusing on. But the key is really that mindset, and that's where your side of the world and our side of the world really need to get together on that.
Sure. So is that those 2-1 buy downs and things like that? Is that something that is brand new, or has that been around for a while and it just really wasn't utilized? Maybe it was underutilized because the interest rates were quite a bit lower.
So what happens is banks take those products away, right?
Okay.
So understand the key to anything is understanding where someone is coming from, right? Why is this product out there in the market? Well, the product is out there in the market because nobody can sit still. Banks can't sit still and not have loans either. Okay. So they create products to help people get off the fence. So this product is an incentive for buyers to say, hey, listen, we understand times are a little bit tough. Inflation is high, gas prices are high, egg prices are ridiculous. You know, let's figure out how can we make people buy today rather than saying, well, I'm going to wait for rates to come back down, you know, and then now all of a sudden the industry is sitting stalled, completely right. Stalled, and we flatline. And I think that would be even worse for the economy. So the products used to be around, they went dormant for a very long time, and now there's a need for them again. So banks have released them out to the market again.
Understood. Thanks for the explanation. Obviously, you know a lot about mortgages, but tell us what's your story? How'd you get started in lending?
So I moved to Florida. I grew up an hour northeast of Boston. So for me, I came down here in 2005, right before the crash, and that's when I got into the mortgage space. I was in that non-Q, back then we would do subprime is I guess what we would call it, for 2 to 3 years. And then right before the crash is when I started doing what we call A-paper loans, the standard stuff that's out there now.
Okay.
And, I did everything I could to survive. And I think surviving was really my key to success, as crazy as that sounds, because we had 90% attrition in the industry. We went from like 110,000 loan originators in the country, in the state of Florida, down to like 11,000.
Right.
So, the Dodd-Frank came in what it used to be a high-paying sales job to be a loan officer, And what they did is they forced us to be regulated and to pass all sorts of tests, and rightly so. But that eliminated that aspect of that high paying sales job. And so for those of us who survived that time, we built relationships with agents like yourself that, needed an actual go-to lender, a person who was going to be there, answer the calls, and stay in the business, not be out of the business in 3 months. So that's really kind of how I started. My dad is a mortgage broker up in New Hampshire, and I just love the flexibility of being able to do, right now, I can leave the office and everything is going to run just fine while I'm here in the studio with you doing this. So flexibility was my number one reason for choosing this career.
Okay. I happen to be married to a lender, and I hear your flexibility because, yes, you do get to step away from time to time, but you guys work your butts off, man. I mean, it's just insane, the calls that come in no matter what time of night and weekends, and because every time your realtor needs you, I mean, you guys pick up the phone and you get the work done. It's quite incredible, and we certainly obviously couldn't do what we do without having you guys as partners as well. So realtors are always looking for ways and systems to establish leads. Do you have any best practices or strategies that you recommend?
I think you have. Well, I think everyone needs to. So for me, I'm very big on numbers. I'm very big on looking back at history in order to determine my future. And what I mean by that is I would take any agent, I would say, all right, let's take a look at your personal loans, Chris, right? Or your your transactions, your sales, and go back the last 6 months and take a look at those last 6 months. How did you acquire every single one of those individuals? And that is clearly what is working.
Right.
It's not what's hot in the market. It's not TikTok. It's not social media. Now, if that is the domain that you use to acquire those individuals and to get those transactions and to serve those families, then fantastic. Keep doing that. But if it's not, if you did it through cold calling, if you did it through door knocking, if you did it through going through your phone, your sphere of influence, then do more of that. I think the biggest problem that lenders, as well as real estate agents, what we're all doing is we're all looking at that shiny new toy rather than historical data that tells us what actually works.
That makes a lot of sense. Yeah, I see so many people that just keep trying new things all the time, and they forget to just go back to, like you said, whatever was working, however you farmed those people in the past, keep doing that because obviously it worked for you. You're totally right. So going back to talking about interest rates, obviously that's a hot topic. So you already spoke to what you're thinking as far as rates coming down. They were saying, like you said, before the end of the year, you're saying 12 to 18 months. What are you seeing? Where do you think that these interest rates are going to go to? If you had a crystal ball.
Yeah, of course. And listen, anytime you talk about interest rates, this is a total guess. There's
we won't hold you to it, I promise.
In general, when you take the collective data of like the Mortgage Bankers Association and Fannie Mae and all these different financial sectors that tell you different things, I think what we think of a stable market is going to be something that's in the mid 4s to the low 5s. I think that is a standard market. There's affordability that's there because a big issue with interest rates now is so loan price, like sale prices have risen so high, loan prices are high, right? So all of these are good things in terms of revenue generating for both of our industries. Obviously, we make more money on a $700,000 loan than we do on a $400,000 loan, and vice versa. Same thing for you guys as well on your transactions. So the units are down, but the income isn't necessarily down because you're doing much larger volume in terms of that.
Right. It was basically a wash.
But the downside to all of those things increasing is that first-time home buyer all of a sudden now is trying to afford a $400,000 home at a 6.5% interest rate. They're getting a squeeze. So it's really difficult to bring that sector back into the market. I think that's there's going to be a challenge for both of us to try and figure out how that happens. And so we'll see what happens. But I think first-time home buyers, it's going to be tough, and hopefully something comes out, some sort of program, but because the sale prices are just really high. Now, at the same token, when we say that, rents aren't going down anytime soon. They just keep rising. So,
right. Yeah, it's certainly getting more and more expensive to live, no matter which way you slice it. What are you going to say to buyers right now that are waiting for prices to drop, interest rates to come down? Obviously, we just touched on that. I don't see prices dropping, especially here in South Florida, anytime soon. I think they're just going to continue to rise. But as for people who are maybe waiting for those interest rates to come down, what do you say to those buyers?
Well, again, I think it goes back to that, what we talked about is mindset, and that you as an agent need to have the same level of confidence that I have when I say this out loud. And it's that, listen, you guys say it better than anyone else, location, location, location. Well, we are in South Florida. So if you're located in South Florida, we have this constant migration of individuals that are coming down from the north, right?
And now from California as well.
Exactly. They're leaving California. They're everywhere. Literally, Florida is like the hottest place to come. So we've got 1,000 people coming here a day. We have a major lack of supply. And that's a national issue. So the lack of supply by itself is creating a supply and demand issue, which means that our demand is sufficient enough with a low supply that prices are not coming down. When I talk to agents and I'll say, well, I'm waiting on prices, or I saw prices going down. And I said, well, are you talking about a ridiculous list price came back down to a normal number?
Right.
That's one thing. That's not the same thing as tell me the last sale that happened in your neighborhood, and did anything after that sell below that? When that starts to happen, then we'll have a depreciating market. But at the moment, we don't. Prices aren't going down. Maybe the ridiculous is coming off the ridiculous,
right?
But it is still at the moment, prices are. So for me, I look at it as, last year and 2 years ago was fantastic in terms of interest rates, but it was also so incredibly difficult. We were putting buyers in all sorts of precarious positions by having to have them, pay $20,000, $30,000 above sales price. They are having to cover all these appraisal shortages because prices weren't, the values weren't catching up as fast as some of the sales were.
Right.
We were removing financing contingencies, no inspections. So from a buyer's aspect, the market was not friendly to them. The only thing they had going for them was a low interest rate. So I take all that negativeness and I spin it to the other side, and I say, now look, this is fantastic. What a better time to buy than right now. I don't have 30 people going to an open house. And in fact, that may not even be true anymore, because I'm seeing already that the numbers, every time, we're writing a pre-approval and the numbers are coming back insane with the amount of offers that are out there. But that whole concept of, look, you don't have as many competing offers. This whole concept of a temporary buy down only works with a seller. And by the way, I'll speak to that real quick, not to sidebar, but one of the things that I love to talk about to individuals when it comes to the temporary buy down is it's the psychology of the seller. Accepting a temporary buy down is totally different than the psychology of seller asking for seller concessions for cash to close. So when you're asking for closing costs to be paid because you don't have enough money, the seller psychologically just doesn't like that. It doesn't sit well with them. But every single seller understands when you're asking to do a temporary buy down so you can get your interest rate from 6.5 down to 4.5, every single person understands that makes a lot of sense, so they're willing to do it. So any agents who haven't mastered this product, this is a phenomenal product, and don't worry about asking sellers. This is not like cash to close.
Right.
I haven't had one seller that I've gotten on the phone, because I offer that to all of our agent partners. I'm happy to speak to any seller. And after they hear me talk about what the temporary buy down does for our buyer, they all rant and rave and they say, hey, that's a really great idea. We're like, well, thank you. I didn't think of it, but we just use it.
Right. You know what? It is a fantastic idea. And most of the time that seller has got to move on to something else, that they're looking to buy a property, and they might want to use the exact same trick to get their monthly cost down for the first couple of years until they can refi.
Exactly.
Okay. So are there any specific programs that are not being utilized by realtors right now and that realtors should advise their customers of?
I think there's a great opportunity in the renovation loans. I think that one of the ways that lenders can differentiate themselves is by offering more than just we all have access to Fannie, Freddie, FHA, VA, like all the basics. Everyone is starting to do the non-QM stuff now. Bank statement loans are becoming a norm, especially down here in South Florida. the debt service loan for investors. That's your basic package. And I think that even the most of conservative lenders have now added that to their portfolio. So I think what you're going to see is that as business gets a little bit thinner here and there, you now need to find even more unique products. That's the construction to perm products. These are going to be some of the renovation loans where something needs to be replaced on a roof isn't perfect or things like that. So I think it's time to, foreign nationals are a great product, especially down here in South Florida. We have, so many different investors. So I-10 loans. I mean, I think anything that makes you unique, and to an agent standpoint, find something that you do that you can figure out that sticks with you, and then go after it, and then partner with your fellow lenders and to find investors who know how to do that stuff.
Well, the construction loans are actually something that people haven't spoken about in quite some time because the market was just red hot. But now that we've got such limited inventory, that's really a good way for a realtor to tap into some extra inventory out there in the market, is maybe start directing your buyers to look at things that aren't completely done. Go and get a renovation loan and redo the kitchen the way that you want it. So that way you at least have some more options out there. Because the inventory is so limited, it'll open up some new doors for properties that maybe you could put a buyer into.
Exactly, absolutely.
Any wild and funny mortgage stories you could share?
That's a great question. I don't know that I have any. I don't know that. I mean, I'm sure I do.
You've had crazy customers.
Yeah, you have all sorts of crazy customers. Listen, I've had people die the day before closing. That's obviously insanely unfortunate for them. But I think in general, the best stuff for me when it comes to crazy wild mortgage stories, it's less about the crazy wild. It's more that same benefit. And I was listening to Brian Buffini's podcast this morning, and it is very, it's that feeling that we get where, so one of the things in my office, I'll give you an example, is that I don't like the word transaction. We cross that word out and we make it family served. And if you start really thinking about that, I would say that at the end of the day, for whatever reason you chose real estate, we do get to serve people, and we do really get to make a really big difference.
Change lives every day.
Changing lives. So I have a call to action that I would love your help on. One of the things that I don't understand is that if you ask lenders who have veteran loans, okay, who have VA buyers,
right,
for some reason, listing agents do not accept VA loans. So you and I need to tag team and figure out how to get that change. I think we owe it to our veterans to find a way. There has to be a way to bridge this gap. I don't know if it requires some sort of guarantee on our part, where we'll guarantee a certain amount of money, but we need to find out from the listing agents, why is it that they naturally look down on a VA loan? And if we can flip that around, then we'll have served in ways that we can.
I think that's fantastic advice. That is something that I try to educate everybody on a regular basis, because VA loans, from my understanding, are incredibly easy to qualify for, which in every right they should be, because you're talking about the men and women who gave everything to serve our country, and we should be taking care of them. And there's just a big misconception out there. It's a lack of education. And I wish that every broker, hopefully we've got a lot of brokers listening right now, teach your agents about VA loans, because they're very easy to qualify for. And I mean, most of the time you've got people that are putting absolutely nothing down. So it's not like you're going to have any issues down the road where they're not able to come up with enough of a down payment. So why wouldn't you be accepting VA loans? It makes absolutely no sense to me.
I agree.
Thank you for bringing that up. I love that you just brought that to everybody's attention. With that, I know that you're a very busy guy. So we are going to move on to one last question, and I will let you get out of here and get back to work. Just want you to share with us a little gem that you have found since living in Florida. If it's a little hot spot, an eatery, a nice place to go and unwind, someplace that you want to go and hang with the family. What's a Florida hot spot, little gem that you could share with us?
Ooh, okay. So I live downtown Delray, and for me, I would say that one of my favorite dinner places is the Grove. Have you had dinner at the Grove?
No, I haven't
yet?
had dinner at the Grove.
All right, so the Grove is absolutely fantastic. I think the whole Pineapple Grove area of Delray for me is, it's just got a great community vibe to it. So
Okay.
they shut down the street. They do, they just do all sorts of different things. So
Okay.
that would be my hidden gem. If you haven't had dinner at the Grove, go to the Grove.
I'm going to go to Grove this weekend and see what it's like, and I'll let you know.
Sounds good.
All right. Thank you, buddy.
Cheers.
We will see everybody on the next episode of Our World Talk. That's it for us. Bye-bye for now.